Hello and welcome to Bitcoin Dorks Updates. Today we will be discussing the recent price movement of Bitcoin and what the experts are forecasting for the future. Bitcoin has seen a lot of volatility in the past few weeks, with prices going up and down rapidly. Recently, the price of Bitcoin fell below $50,000 and this caused a lot of panic among investors. However, the price has since rebounded and is now hovering around the $55,000 mark. One interesting development that occurred recently was the filling of the CME futures gap. This is something that has happened before in the past and it refers to the gap between the closing price of the previous trading day and the opening price of the next trading day. This gap was filled on April 19th when the price of Bitcoin went below $50,000. Some experts believe that this is a bullish signal and that Bitcoin may continue to rise in price. However, not everyone is convinced that Bitcoin will continue to rise. Some experts have predicted that the price may fall even further and that $25,000 is a possibility. There are several reasons for this bearish prediction, including the recent crackdown on cryptocurrency in China and the potential for increased regulation in other countries. In the world of Bitcoin futures trading, there is something called a gap, which is a price discrepancy that arises when the price of Bitcoin moves sharply in one direction or the other, leaving a gap in the chart. These gaps occur because the futures market is closed on weekends and holidays, while Bitcoin continues to trade 24/7. When the futures market reopens, it can cause a sudden price movement that results in a gap on the chart. One of the largest Bitcoin futures trading platforms, the Chicago Mercantile Exchange, CME, had a gap in the chart at the $29,000 level that was left unfilled for months. However, on June 27, 2021, Bitcoin's price dropped sharply to around $30,000, filling this gap on the CME futures chart. This was seen as a significant event by many traders and analysts, who believed that it could signal a potential reversal in Bitcoin's downtrend. Despite this event, the price of Bitcoin has continued to be volatile and has not yet seen a sustained reversal in its trend. Many experts have predicted that the price of Bitcoin could continue to fall, potentially even down to $25,000. This is based on a variety of factors, including regulatory crackdowns in China, concerns over Bitcoin's environmental impact, and increased scrutiny from governments around the world. However, there are still many Bitcoin bulls who remain optimistic about the future of the cryptocurrency. They point to Bitcoin's limited supply, its increasing adoption by mainstream financial institutions, and the potential for it to become a global reserve currency, as reasons why its long-term prospects remain positive. Additionally, they believe that the recent price drops could be an opportunity to buy Bitcoin at a discount, potentially leading to significant returns in the future. The filling of the CME futures gap is a significant event in the world of Bitcoin trading, but it remains to be seen whether it will lead to a sustained reversal in the cryptocurrency's trend. The price of Bitcoin continues to be influenced by a variety of factors, and it is likely that we will continue to see significant volatility in the months and years ahead. As the cryptocurrency market is highly volatile and unpredictable, it is difficult to make accurate price predictions. However, many experts and analysts believe that the current trend in the Bitcoin market is bearish, and the prices may continue to fall in the near future. One of the factors that contributed to the recent drop in Bitcoin prices is the expiry of CME futures contracts. These contracts have a fixed expiration date, after which they are settled in cash. When the CME futures contracts expire, there is often a gap between the closing price of the previous contract and the opening price of the new one. This gap is known as the futures gap, and it tends to get filled at some point in the future. In the case of Bitcoin, the CME futures gap was around $9,635, and the Bitcoin price fell to fill that gap. This is not an unusual occurrence, as Bitcoin has filled many such gaps in the past. However, some analysts are predicting that the next gap to be filled could be at $25,000. There are several reasons why Bitcoin could experience such a massive drop. One of the main reasons is the increasing regulatory pressure on cryptocurrencies around the world. Bitcoin. Another reason is the increasing competition from other cryptocurrencies, such as Ethereum, which has been gaining popularity in recent months. As more investors and traders turn to Ethereum, the demand for Bitcoin could decline, leading to a drop in prices. However, there are also many factors that could support Bitcoin prices and prevent them from falling too low. For example, the recent announcement by Visa that it will allow the use of stablecoins to settle transactions on its network is a positive development for the cryptocurrency market as a whole. In addition, the increasing adoption of cryptocurrencies by institutional investors and large corporations is also a positive sign for the market. As more institutions and companies invest in Bitcoin, the demand for the cryptocurrency is likely to increase, which could lead to a rise in prices. Overall, the future of Bitcoin prices is uncertain, and it is difficult to make accurate predictions. It's important to note that the cryptocurrency market is extremely volatile and that no one can predict with certainty what will happen in the future. However, it's always a good idea to stay informed and to be prepared for any eventuality. In conclusion, the recent price movement of Bitcoin has been both exciting and nerve-wracking for investors. While some experts believe that the price may continue to rise, others have predicted that it may fall even further. It's important to stay informed and to be prepared for any eventuality. That's all for today's video. Thank you for watching Bitcoin Dorks, and we'll see you in the next